The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got 24 minutes to go until the start of trading, and you got markets slightly in the red. We got some central bank action this morning. We have the PPI out this morning. We have the Federal Reserve meeting in 6 days from right now. You have the ECB. They are cutting their overnight lending rate by 25 basis points to 3%. You have President Lagarde speaking right now as we come on the air. We'll jump over to the euro, the dollar, some currency action, and then the Swiss bank cutting by somewhat of a surprise 50 basis points. One of my best friends lives in Switzerland. I was talking to him a day or two ago, and he was telling me about that he's looking to purchase a home and that they're going to get literally almost a 0.95%, I think, was going to be their mortgage that they were going to get. And it's staggering coming from the U.S., right? But we'll go over it all. We get some currency action. We got markets pulling back from the highs we had yesterday. We put it back to a 15-minute. There's your S&Ps. A little bit of volatility on the PPI number, but we're right back to where we were before that, and we'll get into that as well. But nonetheless, S&P is off by 13 points. Quite the acceleration yesterday. You trade up 50 points from where we were at 8:30 on the CPI number. S&Ps trade higher. NASDAQ led the way yesterday. Right now, we're negative by 0.2%. NASDAQ 100, you talk about an acceleration. We were up almost 400 points, more than 1.5% from where we were at the beginning of the session. We trade up to 21,820. We're off by 0.5% right now. Dow was in the red yesterday, right? Check it out. Quite a divergence from some of those other charts. Jump back to the NASDAQ 100, what it looks like. You can't even see a bump on this Dow chart. Dow off 0.1%, and you get the Russell off by about 0.5% right now. Bitcoin, how about it? 101,000, holding up well. Crude right at $70 to the penny as we speak right now, off 29 cents. Gold pulling back with the currency action. We got a trade higher yesterday to 27.61. We're at 27.25 right now, right where we were about 24 hours ago on the give back. Now we jump over to yields. All right, what do we got going on right now? We got higher price, lower yields. What's interesting is that's the move we got initially yesterday, and boy, you talk about a give up, right? We trade from 111.06 down to 110.14. We had the 10-year at about 4.3% earlier today, but I think it's just under that level as we've gotten a little bit of a spike since I was looking at those markets early this morning between about 6 and 7. You jump over to the dollar index. Dollar holding up well, 106.70. And you jump over to the euro US dollar, where we're going to kick things off. The euro pushing a little bit of weakness down to 104.69. And we jump over to the headline. Before we get to Swiss, we jump over to Europe. And there it is. ECB says the data suggests the economy is losing momentum. So they cut 25 basis points. That number brings them to 3%. What's interesting here is, right, some of the numbers they talk about. How about looking forward to 2027, they're looking for barely 1% growth, 1.3% growth. Quite a divergence. What's going on here and what's going on, whether it's in Europe, and then, boy, you jump to the Swiss National Bank. 0.5 point cut to stem gains in the franc. And what they talk about is, now let's jump over, all right? There's your dollar Swiss franc. There's your volatility, okay? You jump over to the daily, you talk about an acceleration coming from September from 84 all the way up to 90. And what they speak to here, okay, is that it's the biggest reduction in almost 10 years. They've almost unloaded the clip, as in they're now at 0.5 percentage point. They go down 50 basis points, and they now sit at 50 basis points, okay? So the 0.5 point move weakens the appeal to speculators at a time of a lot of uncertainty. So it's interesting, right? Everybody is flocking to the franc. There's a period of uncertainty, whether you're talking about Ukraine, Middle East, what Donald Trump brings in the next administration. He is looking to deter traders who have plowed money into the Swiss franc in recognition of its traditional role as a safe haven. Pretty remarkable, right? But then what do? Because guess what? They're at 0.5%. Well, look at their inflation forecast. Okay? Yeah, you're in the doldrums here in terms of where we come in and where we go forward for 2025. They're worried about growth, they're worried about uncertainty, and they're worried about, some currency issues. They brought down borrowing costs at all 4 meetings this year. Yeah, now they meet every 3 months, the Swiss bank. They meet every 3 months. So they probably wanted to get ahead of what the euro could do and what the European Central Bank could do with multiple, okay? Yeah, but they got some issues. 1.3% growth in years to come, not going to cut it, to say the least. So you're going to see some action today, whether you talk about your Swiss franc, but keep an eye on the dollar. Looks like we're heading to 107. I'm going to pull that off for some clarity, put it back to a 15-minute. We pushed 106.85 this morning. We're at 106.75, and just think about it, right on a grand scale. So the odds right now, and this is interesting as well, when you really talk about it. Rates rising so quickly that there's actually now a 2% chance that the Fed doesn't cut. And the reason why is that yesterday, this was 99.9%. Okay, small numbers, small differences, but 99.9, folks, percentage, leaving 0.1 percentage chance that they would stay there, is a 1 in 1,000, as opposed to a 1 in 50 chance today. Point being, rates are on the rise right now, even with the December meeting priced in. And yeah, you're talking about it in the den. I was looking at that this morning. I mean, look at this move that we have even in the 30-year. Okay, you're talking about a move over the last 4 trading sessions from 120.10, and this morning we were as low as almost 117.10. And that is lower price, higher yield, even as that December meeting gets priced in. We do have a bounce going this morning. We'll see if it holds. You jump back to that euro US dollar. Yeah, as you got euro weakness. And, they take out the big news on the ECB is that they take out that they're going to be restrictive. I think they have it in here somewhere. No, they don't. But they should, and they'll have it in the points because that's one of the biggest takeaways. She's talking right now. They're updating in terms of what she's saying. But the biggest takeaway there is that they take out that they're going to be restrictive. They're not going to be restrictive. That's not the deal. They're now worried about growth. They have a growth problem, and they need to cut. They're cutting by 25 basis points. The Swiss bank is cutting by 50. Our bank is probably cutting by 25 basis points, but we're going to be at 4.25% when we cut in 6 days. We're going to be at 4.25%. ECB's at 3% right now, and they're on a path. We're not on a path. That's going to keep the dollar with some strength, and we're at 106.810, and it's the reason why this dollar can't trade lower, man. As Europe cuts, Swiss bank decides to cut by 50 basis points. I mean, I couldn't believe it. It seemed like a different planet talking to my friend, and I hope he gets it done. I was joking with him this morning. I was texting him over there saying, why would you buy a house right now? Just wait until you get negative interest rates in Switzerland. That might be what's coming, because that is on the table as they put it in Switzerland. Not here, folks, not here. We're at 4.25% as of 6 days from right now is what the market thinks, and we'll check it out. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Welcome back, folks. S&P is off by 18. NASDAQ 100, we're off by 118 right now. You got the Dow off 58. Russell off by 10. It is interesting. So we're coming on the air. I'm listening to Lagarde talking. Then Trump starts talking. Basically, as I'm coming on the air, you have the Swiss National Bank out there. We got PPI numbers. We got jobless claim numbers. We have a Fed meeting in 6 days. But we got a lot going on. It's December 12th. We got 13 days until Christmas. And what's interesting is it's Thursday. We go through this week. You get the Fed next week. But boy, after that week, right, you look at the calendar, Monday is December 23rd. Yeah, you might get a little action, but when these holidays fall on a Wednesday, it really chops up these 2 weeks that you're going to get in terms of Christmas and New Year's. We come back January 6th after that. And yeah, there'll be trading. We'll be here and, we'll be doing shows. But in general, participants, doing a lot of other things having to do with the holidays, kids off from school, etc. So really all we have is next week. We go through the Fed on the 18th, and we get there. But today we get some action in a big way. All right. I mentioned PPI and jobless claims. Jobless claims rising, 242,000. The market was looking for 220. And when you look on a continuing basis, hard to deny we are not rising. That is an uptick on a continuing basis. We are rising, which is a lot more important in my opinion. Now, the continuing claims number is a delayed number that has to do with Thanksgiving, too. And if you look at the fact that initial claims rose last week, continuing claims are 1 week delayed, that's going to be a number that is added to the continuing number when that reports next week, right? This initial claim number we just got at 242,000, that number is going to be added to the initial, to the continuing claims, and then you'll get the drop-off, of course, with anybody. But the point being, that continuing number is going up. We got an uptick in the initial. And yeah, we're talking about 1.89 million is the continuing claims, and that includes Thanksgiving is the holiday because of the 1 week delay on the continuing number. And then you jump over to PPI. Prices are climbing, but not for the numbers that are in the PCE, which is an interesting complexity of how it goes. But check out this chart, right? You talk about charts. Wholesale inflation accelerates. You're looking at PPI in the black, and you're looking at core PPI, excluding food and energy in the yellow. What would you say if I told you that they started bottoming in June of 2023 and have been rising for the last year? This is a long chart. Okay? Wholesale inflation is accelerating. Now, the disclaimer there, okay, is that the components, let me find where they talk about it. So, here we go. Economists pay close attention to the PPI because several of its components feed into the Fed's preferred inflation gauge, the PCE. We don't get the PCE until after they meet next week, but we do get the components, some of them, that help you forecast what the PCE will be at. Those were favorable across the board as healthcare, like hospital, physician, nursing home services, home healthcare, little changed. Portfolio management, financial services, capturing fees paid to investment advisors, okay, fell along with airfares. Yeah, so as I say, PCE doesn't come out until after the meeting, but they have a good idea of what it's going to show, and they're widely expected to cut by 25 basis points, and the numbers that factor into the preferred inflation gauge, they're good in this number, yeah. Goods prices jumped 0.7%, the most since February. Yeah, 80% of the advance, food. Remember we talked about yesterday acyclical inflation? Acyclical inflation is what the Fed does. Let's put it, the acyclical inflation are components of inflation that the Fed's policies do not influence, generally, okay? And those factors, acyclical inflation, which the Fed doesn't really have the ability to influence with their policy rates, as well as cyclical inflation, which they do, acyclical inflation has been a tremendous amount of influence on the way down, and now it's rising again, which is going to be a thorn in Powell's side. Food prices is one of them. What is up with egg prices? Well, we got a bird flu going on. I bought some eggs yesterday. Not that bad. I'll go on my Sam's promo. I got to get a sponsorship from the Walton family and Sam's and Walmart. But no, hey, Sam's, they got some great, I'm not going to pull it up. They got some great eggs, folks. I'll tell you. So if you're in the market for eggs, right? You ever hear this where they talk about eggs? Eggs are cage-free, right? Or pasture-raised. You really want those eggs to be able to walk around in pasture. They get pretty expensive when they do, though. Okay? You can be cage-free, and they're still just feeding all those chickens corn feed. But if you get pasture-raised eggs, the chickens, look at me, I'm becoming a health influencer, right? But why not? We're talking eggs. Because this nuance, you go down the YouTube rabbit hole some night, hanging out, right? Watching, going about eggs. Pasture-raised, the chickens are walking around and they're eating little worms, little bugs in the pasture, which makes it, you can tell the yolks are different. It's pretty amazing. The kicker, though, is pasture-raised eggs are crazy expensive, but Sam's got a good deal on them. There you go. Market's deteriorating a bit. S&P's off by 14. We jump over to Walmart shares. This thing, quite a tear. We're pushing $95 right now, $94.96 for Walmart. And we check out some of the tech stocks. It was quite an acceleration yesterday, man. Amazon, how about that rocket ship, right? We trade up to almost 231 and change yesterday. That just missed an all-time high. No, that did. Intraday was an all-time high, right? Yeah, it was 231.20. just missing the overnight print you got on Sunday night. Nonetheless, Amazon sitting at all-time highs. You jump over to Meta, you talk about a surge higher to 638. As you got Facebook donating $1 million to Trump's inauguration. The lobbying begins. All right, let's see what else we had pulled up here. Yeah, here we go. Alphabet and Tesla. How about Tesla? Let's jump over. I saw something today that Elon has made $7 billion every single day since the election. $7 billion every single day since the election, which was 243. My goodness, right? Tesla gone up on almost $200 from where you were then. You talk about an acceleration, man. And this thing's got how many shares again? 3.2 billion shares, and you're up to almost $200, adding almost $600 billion in market cap. You talk about expectations, man, to the upside. Tesla, quite a surge higher yesterday. You jump over to Google shares as they are experiencing a quantum computing acceleration. Google, look at that weekly bar. Talk about taking out the B point, man. You pull back to the 382, and we're going to take that thing out with volume. Stay tuned, folks. We're coming back for the opening bell.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. Markets open in the red after accelerating higher yesterday. We get the NASDAQ 100 negative by just over 0.5% off 120 points at 21,680. Yeah, some of these Magnificent Seven stocks powering the market higher yesterday. Now, what's interesting is you're getting complete reversal of what we had going on yesterday. Yesterday, you had the NASDAQ 100 up by 1.5%, and you had the Dow in the red. We just had the Dow in the positive, as you have the NASDAQ 100 off 0.5% today. We'll see how the day sorts out as we're just starting off the trading day. But yes, checking out some of the tech stocks. So you check out the headline, right? So you see Apple trade up to almost 251. That is an all-time high. But we don't close at an all-time high because you actually get a red bar yesterday. The reason why I pointed out, okay, is because Alphabet and Tesla join Amazon and Meta. Those four make all-time highs out there, okay? Apple slipped just below that number, and NVIDIA and Microsoft are the only other two that aren't at all-time highs. Now, I'd say that's just okay for NVIDIA. In terms of, yeah, you made it up to 152, but basically we've been holding this high since June, which was quite an acceleration up to 140 for NVIDIA. You jump over to Microsoft shares, not quite at that 468 yet, but nonetheless sitting at 451. And yeah, how about Google, man, right? You check out that. You go back to a longer-term chart of Google. You take basically the market lows of 2022. You go from a low of basically $90. Okay, now, yeah, it might be a little bit lower. You can take the exact low of 83. You could take where this bar began, which is really 89.94. So call it $90. You trade up to a high of 193. So $103 was the acceleration. The low brings you back to about 153, which is that same high we got here, okay? And 153, you're talking about 256, right? You add an A to B equals C to D. If you do this same type of move from this acceleration, and that's a move that you like to see, right? You break above the recent high, you accelerate. Quantum computing, it's almost a comic book in terms of what could be accomplished when you think about the potential for that type of raw computing power on a large-scale basis. And yeah, we'll see where they go. But they're having a moment as well as you're above all-time highs. Think about it. Even as the Justice Department wants to break up Google, you're pushing all-time highs in this market. So you talk about price, man. As we go forward, Google slightly in the red today. But yeah, holding on to a lot of those gains we had for yesterday and even this week when you got that gap. I mean, look at that. Yeah, that's Monday. Yeah, we kicked off Monday trading at 175. We're trading at 195 for Google, up more than 10%. Quite a resurgence. Meta as well, right? I mean, this thing from $88 2 years ago to $628. And then Tesla, the ultimate rally. We hit an all-time high, right? Yeah, hit an all-time high, 426. You talk about it, man. What are we pushing for valuation now for Tesla? As Elon, 1.36 trillion. I think Elon crossed 400 billion market cap. First person to do it, 400 billion. Now that has a lot to do with SpaceX as well, but you better believe it has a lot to do with this equity increasing in value, almost doubling in, not almost, right? Well, you go back to where we were at 138 earlier this year, but I'm just talking about since the election. We've almost doubled. No, we have. That's October 23rd. No, we come into the election at 250. Yeah. All right, a remarkable acceleration. We checked back in on yields this morning when we got a lot of ECB action going on. Oh, we got a little bit of a pullback there. We were up all the way to 110.24. That's only 3 ticks. We'll see how that day shakes out. We keep our eye on the dollar. Not hard to see on a day like today, right? Why the dollar is relentlessly strong. Look at this weekly we got going on. Yeah, you got quite a pullback on Thanksgiving week, okay? But outside of Thanksgiving week, since October, you've had the dollar go up every single week with a green bar, and we're going to be pushing those highs yet again. And compare it. The euro's in trouble, okay, because the European Union's in trouble. They're on a cutting path. They're already at 3%. We're probably going to be at 4.25% in 6 days, but we're not on a cutting path there, okay? You jump over to an article like this, okay, which I was reading. This is the first thing I read this morning. Neutral rate guessing game comes with high stakes in the bond market, all right? Out at 6 a.m. this morning, where is the natural rate? Look at the guesses, and that's a realistic deal. Are we at about 2.5% economy natural rate? Are we at 4.5%? Are we at 3.4? Where are we? Nobody knows, and it's a theoretical number, okay? But if the Fed can get as close as they can to that number, that will lead to optimal results of not an overheating economy and not a restrictive Fed that calms things down too much, causing a recession. And think about the fact that we're talking about 2.5 to 4.5%, okay? That's the range, and it is a wide range in terms of variance where that number can be, even for some Wall Street guesses. I'm just not talking about outliers. I'm talking about real Wall Street guesses of where that number may lie. And then you compare that to something like the ECB that talks about, if I can find it quick enough, anyway, that when we're talking about the growth going into 2027 of 2027 of 1.3%, I think it was. All right, I'll find it at the next break. You add those together, and why are people going to be buying euros? Why are you going to be buying Swiss francs when you can buy dollars and be getting 4.25% right now versus buying Swiss francs getting 0.5%? Yes, there's risks on each side of the trade, but that is going to be a factor on a day like today where you have the euro. All right, look at the weekly. Look where we're breaking right now. And this is, obviously inverse of the dollar, right? Put it back on a daily. You have the lows out there from November 22nd, and we're going to be pushing those lows yet again with euro weakness, dollar strength, and then you jump over to the Swiss franc. Yeah, and you're pushing 89, challenging these lows again. Excuse me, these highs. As those are inverse charts. But that is going to persist because Chairman Powell is not going to be on that type of a path. And yes, even if we cut yields, it's how we fare versus the rest of the world. And this number of 115 out here in the dollar was when we were on a hiking path and the world was not. Well, right now what's going to happen is the world is going to be on a cutting path. And after 6 days from right now, we may pause. So be aware, if we break above this area, man, you're talking about 110 to 115. If you break above this 107 to 108 area and you see even the Swiss bank surprising, think about if Powell was at 1%. Okay, to put this in context, because it's astounding. And the fact that one of my best friends lives in Zurich, okay, he's the one who I visited in Mallorca last September with Tommy. I was the best man in his wedding when he got married. They live in Zurich, him and his wife, their 2 beautiful children. And, imagine if the Fed was at 1% and they thought they were going down 25 basis points and you went down 50 basis points for an overnight lending rate to only 50 basis points. That's where Swiss are. And the euro's at 3%, and we're going to be at 4.25 in 6 days. We'll be right back, folks.
Of your financial future, TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Back, folks. We got the Dow, only index right now, slightly in the green, up by 29 points, 44,251. S&P is off by 13. NASDAQ 100 off by about 110. Bitcoin, almost 102,000. 101,875. You have crude back under $70 at 69.71. And gold. Yeah, and we've been talking about it, right? Lining up today for a lot of dollar strength, and that's a tough one for gold, off by $51 right now, up by down by 1.8%. You take a look at the daily. The run we had from June, a $500 run to the upside. You get back half of that move down to November, and boy, when gold rips lower lately, right? November 25th, and we're having another one of those days, down by $52. Quite a run higher yesterday. You're giving it back today. And we got the dollar holding at about 106.70. You jump over to silver. Yeah, this $32 price area on silver, with just under that level, you break below there, $30 is in play in silver. As you're trading at $31.95 right now. And the 10-year down about 4 ticks. All right, jumping back to that story on the neutral rate. Because there's so much unknown right now, one of the things they talk about in this article is just talking about the volatility, especially on days where you have some economic data coming out, like the most important data point of the month, the jobs report. And what they talk about here, okay, is that on days when the monthly jobs report's released, the move up or down in the 2-year Treasury yields, okay, which has a lot to do with the Fed. And what this article is talking about is if you can peg where the natural rate is in this economy, which used to be at maybe 2.5, but COVID has really thrown some volatility into that and changed the equation, then if it's a low number like 2.5%, well, the Fed's going to be at 4.25%. They need to continue cutting. If the natural rate has grown in the economy, then the Fed doesn't need to cut as far, and that's what they're worried about. That's why they want to be cautious, okay? So on days when you get some big economic data that might tell us where that natural rate might rest, you're getting a lot of volatility, okay? And on days when the jobs report's released, the move up or down in the 2-year Treasury, which is so dependent on the Fed, which is why I paused there, is now 6 times greater than average prior to 2022. And what happened in 2022? Well, what happened there is we start the year at basically no volatility. But that's when inflation started to rear its head. I think it was in March. Let's go back to the 3-year weekly. Yeah, their first hike was in March of 2022. The reason why I won't forget it was because, boy, you got an opportunity to get out of that market following that first hike when they were trying to tell you how serious they were about inflation. They were late to the party. You had the market trade from 4,700 down to 4,100. They hiked, and the market got a relief rally, and then the real decimation was on, down to a double low next year at about 3,500. Now, since then, okay, going back to this chart, extreme volatility because nobody knows where the Fed needs to rest, right? They didn't know where they needed to rest when they were hiking, and we found out it was a lot higher than maybe thought initially. And now they don't need to know where they need to rest on the way down. And you're talking about volatility that we haven't seen going back to 2004, 2005 on that. Yeah. And as they say right here, right, the neutral rate was widely considered to be pretty low for years, but that all changed. Yeah. And that was because of a sluggish expansion that followed the 2008 financial crisis, that it was around 2.5, and it probably is higher. I mean, think about it. We're at 4.5% right now, and this economy's on fire. Yeah, we have some lagging indicators. You know, we have numbers that are rising a bit for unemployment. We have jobless claims rising a bit. Maybe it can come down a bit, but we're at 4.5% right now. Can you imagine if the Fed came out and dropped the overnight lending rate 2 full percentage points? Well, theoretically, if the natural rate, the R star on the economy was 2.5%, and the Fed came out and made their overnight lending rate 2.5%, that would neither be restrictive or accommodative. I think if you ever did that, we'd find out that this economy would go back into an inflation instantly if you got a 2 full percentage point cut. And that's nowhere near it, but that gives you an idea of where you may think the natural rate of the economy is, because if you thought it was at 2.5% and the Fed's at 4.5 right now, then you'd say, well, if I think it's 2.5%, the Fed can go there and we'll be fine. I think most market participants right now would probably say, boy, if the Fed is on a path to 2.5%, I think inflation might be coming back. So maybe they're going to rest at 3.5. And if they're going to rest at 3.5, they're going to be at 4.25% in 6 days. That's only 3 more cuts. Then you add in where the rest of the world is, and I don't know. I think that's lining up to push this dollar. And today, you know, a surprise 50 basis point cut from the Swiss. And they got some problems over there, and they got problems in Europe for sure. But nonetheless, dollar strength in a big way. We check back in on some of the tech stocks. Amazon, down almost 0.5%. They've been on quite a run to all-time highs. We put it back to a daily. You reached that level at 231.20 yesterday. We check back in on Tesla, richest man in the world. They give it up a bit, off by 1.5%. Yeah, was it our man Z, I think, saying in the den? It would be ironic, right, if Trump's ringing in the bell and that's the high. And I'd say that for any president. No knocking anything, man. And that's a deal of buy the rumor, sell the news. It happens everywhere. Okay, but it would be ironic. I mean, it is quite a run, folks, to 6,100. I just showed you that chart of 3,500. This market is up almost 100%. 100% in 2 years. Now, you need another 1,000 points in the S&P, but that's only 15% from where we are right now, right? You go up another 15 to 20%, and you're up 100% in 2 years. And that's not cherry picking the lows of 2,100, okay? That's taking a price point where we were already up 60% from the lows that I cherry picked from 2 years ago, right? So you go up 60% from the COVID lows to the 2022 lows, and now we're approaching 80% higher from that level. Expectations, and you know, we're on an AI revolutionary change. These tech stocks carrying the market higher. Not hard for the market to go up 100% when you get stocks like Meta going up hundreds and hundreds and hundreds of percent over that time. Back up Tesla. Yeah, it was at 200, up 100% since that time. Microsoft up more than 100% since that time. Amazon shares approaching up 200% since that time. This market, man, my goodness, right? And the NASDAQ up more than 100% since that time. Remarkable. All right, folks, stay tuned. We got one more segment. We got S&Ps right now. We're coming into session lows. Yeah, S&P's off by 17 points or 0.3%. NASDAQ 100 coming into those lows as well at around 21,660. Stay tuned, folks. We've got one more segment. We'll come back. We'll take a look at some other equities. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We jump around to some equities with action so far this morning. You got Chewy down by 2.2%. They are doing a public offering, $500 million worth of shares being sold. And yeah, so that's diluting things a bit. You see the sell-off when that was announced last night. We pop a bit on the open. You got Adobe out with their numbers. How about that? Down by 12.4%. Weaker than expected revenue guidance for the fiscal quarter. Yeah, they miss. They're getting punished this morning in a big way. You got Uber shares up a bit. They traded lower yesterday. Yeah, down to $60. They're up right now to 3.1%, rebounding from some of those losses. And yeah, they had pulled back Yeah, and they had a lot going on. Well, there's GM. How about GM halting the funding for Cruise, the autonomous division that had a partnership going on? And then we jump over to Constellation. They're slightly in the red. Yeah, they get an upgrade, but look at that volatility. They give it up. They did get an upgrade, but they give it up. You jump over to some of those tech stocks. NASDAQ 100 off about 122. All the markets slightly in the red right now. We check back in on that dollar. All right, you're giving it up. Look at this dollar. On a 15-minute basis, 106.52, and gold really pulling back today, off by $45. All right, folks, it's that time of year. And yeah, we got a Tiger Dollar sale going on. You can get up to a 40% bonus on whatever your subscription, folks. You sign up, 3 options to choose from. $500, you get 600 Tiger Dollars, a 20% bonus. You spend $1,000, you get 1,300. You spend $1,500, you get 2,100 Tiger Dollars, a bonus of 600 free Tiger Dollars. We send you a TFNN mug. Any subscription, folks, whether you're signed up for a year of the opening call, all right, you signed up a year for Steve Rhodes, Mastering Probability, any newsletter you have out there, I encourage you to check it out. We do 2 sales like this a year. And yeah, that holiday sale, man, amazing how time flies. We got 13 days till Christmas. Have you done that shopping? We got markets. S&P's coming into session lows right now. NASDAQ 100 off 122. Folks, thanks so much for kicking your Thursday off right here at TFNN. Stay tuned. We got our man, Basil Chapman, coming up right now with the Tiger Technicians Hour. Have a great day, folks. Have a safe day. We'll see you back here tomorrow at 9 o'clock. Have a great one, folks.